Monday the 10th of June. Good morning, folks. Welcome. This is Bloomberg Markets Today. I'm Guy Johnson. I'm alongside Kriti Gupta, Tom Mackenzie. Anna has the day off today. We're an hour away from equity trading, a little less from the bond market opening, particularly in France, where we're paying all of our attention today because President Macron has stunned France, he's stunned Europe, he's stunned the markets with the snap parliamentary election. The stock market move, the shock move comes after Marine Le Pen's right-wing party was the big winner in this weekend's EU vote. The euro has weakened. We're waiting for the bond market to open. French bonds are expected to be under pressure this morning. In Germany, Olaf Scholz's coalition is also the big loser. The AfD surging in the polls there. Plus, across Europe, we are watching the Centre-Right EPP looking set to hold the balance of power. This suggests, though, that Ursula von der Leyen probably is heading for a second term as Commission President. Tom.
Let's check in on these markets then, with the politics of France, certainly, and the moves by the far right across the Eurozone in focus. A lot has happened over the weekend after the weekly gains of European stocks last week, and the dynamic, it seems, has changed, and potentially pretty fundamentally. European futures then pointing lower by close to 0.6%. S&P futures currently flat, of course, on the big week for the Fed. The dot plots, the forecasts on Wednesday, and inflation. Euro dollar at 107, down 0.4%. The pound at 127. Markets today starts right now.
This is a serious and weighty decision, but above all, it is an act of trust. Confidence in you, my dear compatriots, in the ability of the French people to make the just choice for themselves and for future generations.
French President Emmanuel Macron, they're calling that snap election following his party's crushing defeat in Sunday's European parliamentary elections. It is Monday morning, and we are waking up to a lot of geopolitics, specifically in Europe. What does that mean for the money story, especially when we're talking about not a ton of headroom and not a ton of waves to be made from France to Germany, even in the UK? And that seems to be the story, Guy, that we're hearing this morning, where we're having these snap elections. But in terms of what that actually means for policy, we're still unclear.
Once again, politics completely confounding expectations and delivering a surprise to the markets. We've seen it with the emerging markets. Now we're getting it in the developed markets. I find it amazing this morning that we've woken up to this news coming out of France. I'd gone to bed by the time this decision was announced last night by Emmanuel Macron. And this surge for the right-wing parties across Europe, I think, is really something that has yet to be fully comprehended. What does it mean for the green agenda in Europe? The Greens didn't do well. What does it mean for spending? What does it mean for the relations with Russia, defence spending? What does it mean for so many things? Europe feels like it's changing direction, and this weekend may have proved to be something of a turning point in terms of policy. Markets, I think, have got to figure out exactly what's happening.
And look,
here.
as you said in the headlines, top line, Ursula von der Leyen expected to remain in that position, potentially. Yep. The EPP, the centre-right, still has that firm grip. On a headline basis, then, as you see the votes coming through across the Eurozone, on that level, not much has changed. But at the local level, on the individual level, individual country, a lot has changed. So the weakening of Macron, the weakening of Olaf Scholz, there is no statesman or stateswoman who now has that.
France and Germany decide what happens in Europe.
Yeah.
That is still the case.
Who had a good night? Italy's Meloni had a good night, right? Yep. Because part of the gamble for the French, then, it seems, and for Macron, is you go and you say, OK, first of all, there's a chance here that during this election run-up for the parliamentary vote, we can convince you that Marine Le Pen's party is not fit to govern, that they'll have blunders, they'll have missteps, the polls will close and we'll come out victorious. The other gamble seems to be, OK, they win, they get into office and they mishandle it because they just can't govern. Well, Italy's Meloni is governing and has just been endorsed by her electorate.
You know, the irony of this whole thing, especially in the context of Meloni, is just how much of a role debt sustainability plays in all of this. To the fact that when we're talking about government finances, it feels like Meloni, I mean, yes, there are still big issues within the Italian budget, but Meloni's making the biggest strides relative to her peers when you look in France and Germany. I know it's a really controversial statement to make, but this is coming off the heels of course, that sovereign downgrade that we saw in France as well. I want to say, not this past Friday, but the Friday before. Macron's having a rough couple of weeks.
He certainly is, but that is why maybe he is making this decision to go to the polls, maybe to provide some stability. Let's get this covered across Europe. Let's go to the key capitals that we need to be watching this morning. Oliver Crook is in Berlin. More there on what is happening with Olaf Scholz, that crushing defeat that he has been delivered by the right and the centre-right over the weekend in these EU polls. But the real story this morning is in France. Emmanuel Macron's risky decision. How big a risk is he running here? Caroline Conan, let's go to you in the French capital. What is the reaction this morning?
You know, some say he's playing with fire. It's an act of despair. And some say it's actually the right move and pretty audacious because you get a couple of years of the National Rally governing in a cohabitation with the President Macron. It's messy politics. And then you don't get Marine Le Pen in 2027 for the next presidential elections. But clearly, there is a high risk here. If you look at the results of these European elections in France last night, clearly there was a referendum for or against Emmanuel Macron. And Jordan Bernella, the candidate of the National Rally, got 32%, historical record here, 8 points more than the last European elections in 2019, and double the score of Renew Europe, who got about 15% in this European election. So clearly, it's a gamble. There is a high risk here, but this was seen as the Republicans who have been supporting Macron in the National Assembly on a case-by-case basis when it comes to legislation, because Macron didn't have a majority. This was seen as the only solutions. Also, one interesting thing to remember is that Macron has already done 7 years. He cannot run again. And he also is thinking about his legacy. And the thing he wants to avoid is what we call the Obama scenario, meaning after him comes a populist.
Bloomberg's Caroline Conan there giving us that update out of Paris. The Obama scenario, it's a really interesting comparison to be made. I'm curious how that translates to the German story as well. Let's bring in Bloomberg's Oliver Crook joining us from Berlin. Ollie, one of the worst performances for Olaf Scholz's party. Walk us through what that means. How similar is it to the story we're seeing in France?
Listen, I think there are many reflections of, in Germany, what we saw in France, which is basically really dissatisfaction with the ruling class, the ruling government, the coalition in the case of Germany, that you have here in Germany. I mean, for the SPD, it was sort of a historic night for Scholz's party because it's the lowest they've ever done in a European election. I mean, they got about 14%. Though the winner was, despite the fact that the AfD did very well, it was really the right in Germany, the sort of, not extreme right, but the CDU, CSU, the traditional Merkel party that took 30% of the vote. But it is, of course, very notable that the AfD did 16%. It's the number 2 party in Germany, following a lot of scandals that we saw from AfD politicians, from things that they had said, from sort of spying allegations, all these kinds of things, that still there was support there that was leading, that remained for the AfD. What you saw the coalition do, though, if you take all of the coalition in Germany, the Greens, FDP, and Scholz's party, they only got 35% of the vote. So you have a question here, I think, from both the German and the French vote, and it is a question about European leadership. You have governing politicians and governing governments within these countries that are sort of counter-programming from this sort of referendum that they got from the voters. And this is a legitimate vote, obviously. How Macron has chosen to deal with this is call the referendum, because I think he is banking potentially in part on the idea that people are willing to make these kinds of votes at the EU level, but maybe not at the national level. For Scholz, it's a lot trickier, because if Scholz were to call an election any kind like that, he would get absolutely trounced right now.
OK, Bloomberg's Oliver Crook, thank you very much indeed, with a broader look at the implications as these votes, of course, and the results continue to come through from that European vote. Ollie, thank you very much indeed. Here's what else to be thinking about then across this week for your agenda today. This is going to be a really interesting one. The Apple Worldwide Developers Conference, and the co-host of the Bloomberg Original Series, AIRL, Jackie DeVallis, will be reporting live from the event later. Really importantly is we're going to get an update, an expected update from Apple in terms of their AI strategy. They are, in many contexts and on many metrics, behind when it comes to many of their competitors. So this is going to be crucial for Apple. It's also London Tech Week kicking off as well, 9 a.m. today. Tuesday, we're going to get the data out of the UK in terms of the jobs data, so that will help inform expectations around the Bank of England and when it goes with its first cut of the cycle. And we're going to get OPEC's monthly oil market report. We see Brent edging slightly higher so far in the session today. Wednesday, UK GDP data and industrial production, so rounding out the picture, or at least fleshing out the picture in terms of the UK economy. And, of course, importantly, the inflation data out of the US for the month of May, ahead of that Federal Reserve rate decision, with the dot plots and the forecasts in focus. Then on Thursday, the G7 leaders meet in Italy. It's the last day of Founders Forum Global. We're going to be there and bring you conversations with top tech founders, CEOs and government officials. And then on Friday, the central bank focus shifts to the BOJ with that rate decision expected to hold, but maybe some changes in terms of bond buying. And the ECB President Christine Lagarde and Chief Economist Philip Lane will speak. And the UEFA Euros kick off with Germany versus Scotland. Go Scotland.
Oh, my gosh.
I mean, some historical links. I have to support the Scottish.
Mackenzie?
I'm not going to be putting any money on it, but there we go. Who would you be backing, Germany or Scotland? Let's tie it into the politics.
I think Germany, mostly to oppose you, clearly.
Right, OK.
Naturally.
We'll set this up.
And Kriti just spent her weekend.
I was just in
now
Berlin.
Our German correspondent. She's vying with Crook to be our German correspondent.
Correct.
Having just spent a few days in Berlin.
Well, they have that big setup by the Brandenburg Gate. They're ready for it. Yeah.
Even I could score in that goal, I gave it to my children. I sent them pictures and they were like, Dad, even you could score in
top left-hand corner.
Yeah, you wouldn't miss that one. So interesting enough, we're seeing early indications that the French vote story and the broader EU story is going to have an impact on equities this morning. So that looks like it's going to be interesting. I'm waiting to see what bond futures, what happens with the bond market when it opens. Potentially 10 minutes' time from now, we'll get some kind of view on what is happening with OATs this morning. Do we think... So where does the volatility come from this week? Is it this parliamentary story in France? Is it the EU vote? Is it European politics? Is it politics, once again, that's going to provide the catalyst for volatility this week, which remains quite low? Or is it going to be the Fed, CPI, and that story come Wednesday? I don't know yet, but certainly politics has been providing some interesting kind of opportunities maybe to trade recently.
I'm going to venture out and say it's going to come from the States. Surprise, surprise. But here's why. Here's the logic here. When you look at some of the fundamentals of the UK, France, Germany, that are supposed to be driving this bond market or even this currency market, the weakness you're seeing in the euro, for example, you talked about it earlier, 107.51 there. Yeah. It's still not that big of a drop relative to what you would, in theory, kind of see. And I think a lot of that is simply because there's no headroom in the UK, in the French budget, in the German budget, either way. If we're talking about the issues of immigration, of debt sustainability, even defense spending as well, these are all grand thoughts, but there's actually no money to do anything and to deploy. And I think for that reason, that's why perhaps the monetary policy in Europe takes a back seat and it really becomes more at the whim of what's going on in the States.
It's going to be really interesting to watch the spreads, isn't it, between bunds and the sovereigns on the periphery, so BTPs, given the electoral dynamics have shifted somewhat in terms of the leadership of Italy getting some backing versus what's been happening in Germany, and whether or not you start to see a bit of a squeeze there in terms of that spread. On the back of that, it's going to be interesting to watch. Do you have a land?
So
do you push back on Kriti's view that it all comes...
So you've got two forces at play in the market right now.
Yeah.
You've got obviously we've got three forces. You've got the tech story, which is going to be relevant, I think, today with Apple. I think you've got the kind of monetary story, which I think is going to be relevant with the Fed and the CPI data. The Fed's probably going to cut. The indications are that the Fed comes through with 2 cuts this year. The market's already priced 1. So in some ways, the Fed sounds dovish relative to market expectations. Yeah. But I think the bigger force at the moment and the bigger surprising... The bit that's surprising markets at the moment is on the fiscal side, and that continues to be this kind of slow burn. You've talked about it, Kriti, this slow burn narrative of stronger fiscal spending. Now, Europe, I think, is going to be fascinating, given the sort of shifting politics at the moment about where the emphasis of that fiscal story lands and how policy evolves. As Europe, it seems, turns right, it's interesting that the UK potentially is turning left. So that divergence is going to be an interesting one to watch out for.
Some would question how left that left is.
Well, precisely.
On the Green agenda, so moving, the expectations is we'll wait for the exact numbers, but the Green Party or Green parties across the Eurozone taking a big hit. So that ties into your fiscal spending question. To what extent does that put a constraint on spending around the shift to renewables, expected maybe to drop from 71 seats to 53? It's quite the drop, 71 to 53. And they've played, of course, that consequential role within the coalition of Germany. And there's pushback now on some of this policy agenda.
As Europe turns right, do we see an increase in defence spending? As Europe turns right, do we see less spending on social security? How does it affect immigration? How does that immigration story then affect what happens with inflation and the labour market story? There's so many kind of permutations around this narrative. I don't think on a Monday morning after the results, I think it's hard to understand them. But I think over the next few days and weeks, that'll become clearer and clearer.
A lot of those themes have mirrors and echo in the US as well. It's just that arguably, and Kriti may make that argument as well, the US has more fiscal space to be able to enact on and react to some of those questions and themes and evolutions that we're seeing. Talking of which, Joe Biden, he is the president.
You got it.
Joe President is going to warn and has warned against the rise of isolationism in the US while visiting a war cemetery in France that Donald Trump famously skipped 6 years ago. We're going to get more on Biden's European trip and look ahead to the US election. Plus, Apple's Developers Conference will show whether it can be a force in the AI industry, really consequential around artificial intelligence and the play from Apple. We take a look at what to expect from that event. If you have any questions of your own for our guests, send them to us on IB plus BBTV Go. This is Bloomberg.
See now some instability in countries like in France or here also in Belgium. Let's see how the outcome of the national elections will look like. And that means for us, we have to do as reasonable politicians on European level our best to organize again stability. That is what we need in Europe, but also to contribute to the global development.
I think it makes no sense. I think it's just very stupid and it's not democratic. Democracy doesn't mean that the result will be something that you like. So when people vote, you see the result and you need to consider it as an information. Information, people vote, you don't like the result, but what is the result here to teach you about?
That was the President of the European People's Party, which largely came out on top over the weekend, Manfred Weber, and the Vice Chair of the European Conservatives and Reformists Group, Asita Kanko, talking over the weekend, talking about the result that we've just had from these European elections, which are clearly causing consternation in France and in Germany as well. We're waiting for OATs to open. We're waiting for Bunds to open to give us an idea of exactly how fixed income investors in particular are viewing what is happening here. We are expecting potentially significant moves. We are already seeing a decent move when it comes to euro-dollar this morning and euro-sterling. Sandrine Perret, portfolio manager at Unigestion, joining us now to give us her take on what is happening. Sandrine, let's talk a little bit about how politics is starting to make itself felt in the European bond markets. We've seen this obviously in the past, but over the last few years, we've largely been focused on what is happening with monetary policy. How, as a fixed income investor, are you thinking about factoring into your portfolios the results that we're seeing in France and Germany and the rest of Europe into your portfolio?
Well, I think in terms of fiscal impact, first, the result of the election, the European elections, are not totally a surprise. Some part of it was expected. Now, in terms of fiscal impact, we've seen, this pressure on bond market and also on the fiscal stance in these countries before the election. And we've also seen a lot of pressure, for example, France losing its being downgraded by S&P only like a week ago, especially on this outlook for fiscal spending and the question marks that we see in Europe regarding fiscal sustainability. So in that sense, the European elections are just going to add a bit more uncertainty on the fixed income market. But this, I would say, was, well priced into the bond market already before the election, so before the weekend.
Are there long-term implications for things like immigration and how that impacts ultimately inflation? Is this a labour market story? Are there other ways of examining this? As Europe maybe shifts to the right, are there impacts, do you think, in terms of the long-term economic data we should expect to see in Europe? And therefore, again, by extension, how bond markets should think about pricing some of these moves?
Well, certainly, I think there will be implications for the entire agenda in Europe, whether it's immigration, the green transition, and also, of course, the fiscal stance. I would say for bond markets at the moment, we are more impacted by monetary policy in terms of direction. We've seen since the beginning of the year that the expectations for rate cuts and the easing cycle is probably way more important for bond market at the moment, at least the outlook for this year, rather than only the fiscal sense that always have an impact on spreads, on the level of yields. But in terms of outlook, the market is focusing at the moment on the outlook for monetary policy, and also expectations that the rate cuts that started last week, with the ECB delivering the first rate cut in about since the COVID crisis, is having more an impact on the bond market at the moment.
Sandrine, in terms of that monetary policy, when you start to see a divergence between the Fed and the ECB at the moment, to what extent does the Fed actually matter for European markets, given that the ECB, at least temporarily, may be on a different path?
Well, I think they start to be on a different path. So we've seen last week the decision from the ECB. We've seen also Bank of Canada cutting. So it seems that some central banks are starting before the others. But in terms of divergence, I think, as long as all central banks continue to signal the direction is to go lower on interest rates, the market and also European market can probably digest a bit of divergence. Whether the Fed starts, a quarter later or even this autumn rather than during the summer, which is our expectations at the moment, and probably what Powell will repeat on Wednesday, we think that, probably FX market and also the bond market in Europe can digest a bit of divergence in terms of monetary policy outlook. But remember as well that, the easing bias remains in place in most developed economies, whether they start early or a bit later.
Sandrine, we've seen an uptick in, of course, the volatility in the bond market that isn't necessarily matched, today being the exception of FX volatility. Is dollar strength, for example, a concern at all here?
Well, I think the Fed has to take, everything into account. They haven't really been focusing on the dollar strength. I think for the time being, they continue to look at, economic data. We had on Friday a pretty strong, very impressive non-farm payroll numbers. And I think on Wednesday is probably what they will address, the strengths of the economic data that we see. The cracks that we start to see a bit, across various metrics, and probably also, how they assess the situation in terms of inflation. We had 3 months earlier this year where we had a lot of inflation surprise, 1 month with data that was in line expectations. And again, on Wednesday, we have to see, whether there is more confirmation that the inflation cycle is slowing or at least gradually going down to 2%. And until that, I think we have the Fed really more focusing on the economic outlook and the data that we get.
Sandrine, if we go from 3 to 1 in terms of the dot plots and the forecasts from the Fed, what is the multi-asset adjustment to that forecast?
Well, I think 1 would be certainly a surprise. The market is expecting the dots to fall to 2 cuts this year from 3 back in March. There is a risk that the median, is downgraded to only 1 cut. I think there would be, of course, some surprise in that sense. The market is pricing 1.5 at the moment, so that would be going closer to market expectations. But I think for the broad risk or the entire, for example, equity markets, I think the direction is probably still more important, as I mentioned, than the number of cuts, whether it's postponed to next year, as long as we have these expectations that the direction or the easing bias remains, that will be probably, good enough, or at least the market can digest this kind of decisions, or at least this guidance on Wednesday.
OK, Sandrine Perret, Portfolio Manager at Unigestion. Thank you very much indeed, as we lean up, of course, to that decision from the FOMC and adjusting as well, and taking into account the market adjustments and reaction, of course, to the politics of the Eurozone. Coming up, French President, talking of which, Emmanuel Macron gambles, of course, on that snap election. We get more details next. This is Bloomberg.
Welcome back to Markets Today. We're about 30 minutes from the start of today's trade. Look, there's a lot to digest here, namely the European parliamentary elections from over the weekend, a stunning shock defeat and also call out of French President Macron, talking about snap elections when it comes to France. When it comes to the market reaction, we're seeing a little bit of a weird one here. You look at the front end of the French bond curve, you're seeing a bid into the front end, but you're seeing a sell-off in the back end. Of course, the 7 and the 10-year not quite open yet, so we're going to bring you that price action when we start to get it. But at the moment, it feels almost like my immediate gut reaction seeing this is perhaps it's a liquidity story driving into the front end. What do you think?
But potentially, there's also a reaction probably to Friday's payroll number that we need to factor into our thinking as well. BTP's opened, and actually yields are on a 10-tenor. BTP, the most liquid market in Europe, are showing yields are higher, up by 6.6 basis points at the moment on a 10. So we'll wait and see what bunds do. We'll wait and see what OATs do in terms of the 10s. But it's obviously being the 10s when we get that to when we get those open. I'd expect it any second now, so we'll kind of factor that into our thinking over the next couple of minutes. Let's talk about the politics. Let's factor in that story into what the market narrative is this morning. The French President, Emmanuel Macron, calling that snap election following his party's defeat in Sunday's European parliamentary elections. His party came a distant second to Marine Le Pen's RN party. Over in Germany, you've got Chancellor Olaf Scholz's Social Democrats. That it was the worst ever showing that party has seen the far right in Germany clearly coming through very strongly. What is interesting in some ways is that the EPP has held the centre ground in Europe, though. And that points us maybe towards this narrative that Ursula von der Leyen will continue potentially as Commission President. Let's go to Brussels now. Stephen Carroll is standing by for us there. Stephen, fold this story to sort of all in together for us. You've got clearly the right doing better in France and in Germany, but the EPP holding the centre ground. What does that tell us about the direction of Europe here? How should markets be viewing the big picture story that comes out of this weekend?
Well, it's the contrasting narratives that you're getting from different parts of the European Union. Let's start with the big European level picture. You're right, that centrist coalition, the EPP having their best score in many years in the European parliamentary election, reversing the slow decline they'd seen in their vote share over the past number of European elections. Then look at the Socialists and Democrats also holding ground there too. We had a little bit of a slack off in the Renew group, the third member of that alliance that brought Ursula von der Leyen to the position as European Commission President 5 years ago. That's largely due to the French story in that political grouping, because that was the grouping that was dominated by Emmanuel Macron's Renaissance Party. So actually looking at the numbers, they look pretty healthy for Ursula von der Leyen and her bid to get a second term as European Commission President. We spoke to the President of the EPP, Manfred Weber, last night at the European Parliament, and he said, look, it's very clear the EPP has won, centrist politics has held. Now it's up to the European leaders to essentially get on with it, confirm that they want Ursula von der Leyen as their nominee and put her forward to the Parliament. Ursula von der Leyen, for her part, said she's already out there coalition building to try and make sure that those partners stay on board, because that's another piece of the puzzle here, is just because you have the maths on paper doesn't necessarily mean you'll get the same number of votes when it comes to trying to build that 361 that you need to become confirmed as European Commission President. So the next step becomes the European leaders looking at this issue at an informal dinner this day next week. They'll be tossing around names. Remember, this is the time 5 years ago that Manfred Weber, who was supposed to, looking at the elections, become European Commission President, got tossed out in favour of Ursula von der Leyen. Then there's the individual country picture, and that explaining perhaps some of the market reaction you were just talking about there as well. Emmanuel Macron taking a big step, calling that snap legislative election. That could really upset French policymaking over the next couple of years. Emmanuel Macron will still be as president, but he could be setting up a return to a situation we last saw under Jacques Chirac, where you have the president from one party, a prime minister from another. It's euphemistically called cohabitation in French, which covers all manners of sins, and you can imagine what sort of relationships can happen under cohabitation. Generally, for markets, though, it means policy stagnation. It's very difficult to get anything done in that scenario.
OK, policy stagnation. We check on the markets, then the trading around the German 10-year right now. Yields up just 1 basis point on the German 10-year. The Italian BTPs, the 10-year, you're seeing a reaction there in terms of a sell-off. Yields up 6 basis points. And in terms of the French 10-year as well, some movement there. Pretty significant movement on the 10-year, Guy.
Yeah.
What's your take on the market reaction?
It's really interesting to see what's been happening with OATs.
Yeah.
Big move, obviously, surrounding what we saw with payrolls Friday. That was the first kind of big shock that the markets had to digest. That was Friday. And then you get another gap lower this morning in terms of pricing. So OATs have taken a sort of two-step leg lower in terms of pricing this morning. Unsurprising to see that reaction from the market here. Just uncertainty. I think that's a logical story to see yields potentially going higher, or yields going higher.
On that uncertainty, Stephen, to what extent is the far right part of that question? Because you've painted a picture where the EPP and the Social Democrats have a pretty firm grip, if you combine them, across the parliamentary arithmetic of the EU. But on a national basis, we talk about the National Rally in France, the AfD, of course, in Germany. Above and beyond Germany and France, how well are the far right performing?
Well, look, I mean, if you look at Giorgia Meloni's party in Italy, a huge increase in their score in elections there, and that actually confirms her position in power. So it runs against the narrative that we're seeing in other European countries where the incumbent's getting a kicking, like in France and in Germany. Actually, quite a similar story out of Spain as well. Pedro Sanchez's Socialist Party actually maintaining their vote level, still coming second to the Centre-Right party there, but not losing out to the same extent. And we're getting that picture across a couple of other European countries as well. There was good news for Donald Tusk in Poland that his party overtook the Law and Justice Party in results there too. But this is, a complex national level picture, and it's also up to the governments how they respond to this. Nobody would have really thought, because actually the results in France were largely in line with opinion polls, that Emmanuel Macron would use this as an opportunity to call a snap election. That's the decision that he's made, which puts things looking much more uncertain there. Elsewhere, the picture more broadly, again, going back to that centrist coalition, means it looks like actually things might not be so difficult to build a coalition around a next European Commission. So perhaps the issues might come at a national level rather than at a European Union level.
All right, Bloomberg's Stephen Carroll joining us out of Brussels. We thank you so much. Of course, as he was speaking, we are starting to see, again, more of that volatility, especially in the front end of the curve. Remember, when the markets opened on the French market, you did actually see yields on the front end drop. They're now selling off. You're already just right off the bat seeing something like 4 or 5 basis point intraday range. And again, only in the first couple of minutes of trading. That's going to be something we're monitoring for you as we continue the program. In the meantime, let's get the American perspective here. We heard from our last guest as well, talking about the fact that perhaps just all eyes may actually be on what American monetary policy looks like, but also foreign policy a piece of that as well. Joe Biden looking to bolster French ties in his meeting with President Emmanuel Macron, who has historically been very vocal against Biden's IRA. And that, of course, coming as the U.S. leader and the French leader commemorate D-Day at the end of last week. In the same vein, Biden also took aim at Donald Trump's America First policy, warning against isolationism ahead of November's election. An ironic thought, perhaps many would say. Bloomberg's DC Bureau Chief Peggy Collins joins us on the program this morning. Peggy, a pleasure to have you here. Welcome to London. Welcome to our set. It's really interesting because we're starting to see, when you look at the actual policy changes in terms of isolationism, I'm going to get that right, between President Trump and Joe Biden, it's actually not that different. Whether you look at their approach to Europe, whether you look at NATO spending, whether you look at their relationship with China, how might that differ?
Well, I think in one way, Biden is trying to show that he's going to work with allies more. And that is one thing that I think does differentiate them, at least in the way that they are positioning themselves. I think also, if you look at the split screen that we had just yesterday, Biden being in Europe, meeting with Macron, trying to toe that line of supporting Ukraine, but also saying we absolutely cannot put troops on the ground. And then you flash back to the U.S., where Donald Trump is now able to campaign again because he's not in court every day. And where does he go? He goes to Las Vegas, Nevada, one of the hardest hit areas in the U.S. in the pandemic. And he says to workers there, he floats the idea of not taxing tips on workers like waitresses and waiters. So he's really zeroing in on the pain that Americans are feeling when it comes to prices in the economy, while Biden's trying to navigate huge foreign policy issues around the world and campaign domestically in the U.S.
Do you think the White House will have paid attention to what is happening in Europe this weekend and this lurch to the right? How will that resonate in the United States? How will that resonate in D.C.? How will that resonate in the White House?
Oh, absolutely. Certainly, they were paying very, very close attention to it, because I think some of these themes that we're seeing in the U.S. election are over here, too. When we do our polling in the swing states, the most competitive states in the U.S. for this election, 2 issues come up time and time again as the most important for voters. One is the economy, and that relates to prices and wages. And the other is immigration. Border security is huge, and it's a huge issue here in Europe as well.
So a lot of echoes in terms of what we're seeing here in Europe and the US. When we look past November then, what is the expectation around the ability for any new president, whichever president it is, post-November, to enact on some of these issues in terms of the political space and the fiscal space?
Well, I think two things resonate there. One is because of the slim majority in Congress right now, it's very difficult in the U.S. to get any legislation done. So we'll have to see if there's actually a change in the House or the Senate. But our reporting is showing that if Trump gets a second term, because he's already been in office and he has a team that's starting to get together, that he may be able to move faster than he did in the first term to get some different things done. And, of course, the Biden administration is trying to continue some of its policies like the IRA and others that resonate around the world, and particularly here in Europe.
And it kind of feels like there's that diplomatic mission coming from President Biden as he makes his way around. That's the approach to France in particular. But when it comes to the likes of even the UK or Germany as well, I'm going to zero in on the UK. There are still tariff stories. There's still a steel story as well that's kind of hanging in the lurch, just being put on ice as both sides of the Atlantic figure out their electoral situation. What might that dynamic look like in 6 to 12 months?
Well, I think it will continue to incorporate the Ukraine-Russia war, right, and how the allies in Europe and the U.S. are trying to show solidarity there. But the other factor is China, right, and competing with China economically and geoeconomically is huge for the U.K. as well as the U.S., and that will continue to be there, I think, for years to come.
The question, when I talk to CEOs and we talk about politics, the question that comes up is just this lack of understanding. They ask me, kind of, what do you think is going to happen in the election? What do you think is going to be the impact in terms of trade across the Atlantic? What do you think relations are going to look like across the Atlantic? How extreme could it get? They just simply don't know, and they're looking for guidance. What guidance can you give? So you've got a European CEO watching the programme this morning. How much volatility can we expect after this election? How much uncertainty does exist currently in the build-up to the election? Everybody's trying to get a handle on what a Trump presidency could look like, but also what a Biden 2.0 could look like as well.
Well, that's right. I mean, investors don't like uncertainty, nor do most business people. They want to be able to have certainty, particularly around tax policy in the U.S. So I do think tax policy is one of the fault lines for 2025, whether it's Trump or Biden. Trump has said he's going to make his tax cuts permanent. They're up for expiration next year. And Biden wants to change some tax policy in 2025. So that's one of the fault lines. Trade, as you were saying, they're not that far apart on in some ways. But we had an interview in the D.C. office on Friday with one of the people who's around Trump and vying for one of the places in his cabinet. And he was saying that one of the things that could happen with tariffs would be somewhat of a sliding scale. Trump has talked about a 10% tariff across all goods for everyone. But what if that was able to slide, depending on if you were an ally in the UK or Europe, lower down than 10%, or if you were someone like China? So I think that's some of the things that are circulating that we're hearing front and center in D.C., at least right now.
Peggy, one of the big themes we're seeing on both sides of the Atlantic is this question of debt sustainability. It's certainly something that's hitting France, the UK, Germany, and, of course, having a real effect in the European parliamentary elections as well. It's the first thing on the new president's docket in 2025, the debt ceiling. January 2025 is the first thing. One of the kind of pros that have been talked about in terms of Donald Trump's campaign is his economic policy is perhaps more serious or being taken more seriously among his own, or crafted more seriously, I think is a better way to phrase it, relative to his campaign the last time around. Walk us through that dynamic. And when it comes to debt, how do Biden versus Trump differ when it comes to tackling the very first problem on their agenda?
Well, they both have spent a lot, and I think you have to put COVID in context for that. So I do think that the Republicans are going to press hard in 2025 to reduce spending, and that the Democrats are going to say, hey, we have to invest in things like following through on the IRA and infrastructure in order to be best set up to move forward as a country. So I think you'll see that fault line. But again, it will really depend on how close the votes are in the House and Senate in terms of Congress. How much can they really get done? And if that majority stays really thin, it's going to be a huge fight like it was the last time.
OK, Bloomberg's DC Bureau Chief Peggy Collins, thank you very much indeed. Really, really interesting context as we think about the interlinkages between the US political landscape as that evolves and what we're seeing in Europe. Coming up, stocks to watch, including Roche, after the Swiss pharma giant's lung cancer drug gets the green light. More on that next. This is Bloomberg.
12 minutes to go until equities open. We've got bonds already open here across Europe, and unsurprisingly, you are seeing yields tracking higher, particularly on the 10-year tenor. In some ways, though, it's not that big a reaction. And I think you just need to see Friday's session and Monday's session together, because you saw a big reaction clearly to the payrolls Friday, and now you're getting another reaction to the politics Monday. And I think you need to kind of amalgamate those two stories into one. Let's talk more about what is happening with the markets. Joining us now, Bloomberg's Rachel Evans. Just talk me through your thoughts on the markets this morning. I'm a little surprised you're not getting yields tracking significantly higher this morning, but maybe Friday's the answer for that question.
Yeah, and I think the market always takes its time to digest the politics. This was certainly kind of a big surprise that Macron came out and called an election straight after the EU results. That hadn't been anticipated. What we did know going in was that the far right was likely to kind of make gains across Europe, and we've definitely seen that. And you are seeing the euro move fairly significantly. We've seen that fall to a one-month low. But the thing I'm really watching behind the euro is some of the metrics in the options market. If we're looking at something we call risk reversals, which gives you a sense of bullish versus bearish sentiment, we've seen the biggest move towards bearish sentiment since March 2023 today. So that shows you that people are seeing this as definitely a signal of more declines for the euro to come. We're also seeing volatility in the euro spike, particularly around the election date that we're going to see later this month, rolling into July. So I think that's something that we really want to kind of keep an eye on.
And it's interesting, we're kind of bumping up against the bottom of the range now, the recent range that we've been in. So it'd be interesting to see whether we break out to the bottom of that and kind of where that would take us. Wednesday. Quite excited about Wednesday. You don't often get a Fed day and CPI day all in one. What kind of volatility should we be expecting there?
Significant, I think. I mean, it's a bit of a double whammy, right? And we saw just how much yields moved in the wake of non-farm payrolls on Friday, right? People are really watching the data on the labour market and on prices to really try and get a sense of what the Fed will do. There's a lot of speculation that even people in the Fed may wait to see the CPI print before they put in their significant dot plots. And our surveys are suggesting that those dot plots could move from forecasting 3 cuts for this year to 2 or even 1 dot this year. Yep. So it's really something that we're going to be watching, and CPI could prove crucial to that.
20 seconds. Impact of the UK elections on markets. We're going to get the Labour manifesto Thursday. What's the MLife Pulse survey telling us?
Yes, this was our survey over the weekend. We're seeing generally gains for all assets. People are seeming to embrace a Labour victory, and particularly for the pound.
OK. Rachel, that was perfect. Thank you very much indeed. Rachel Evans joining us on what exactly we're seeing in these markets this morning as we digest that story surrounding the French election and the European elections. Let's get to from the macro to the single stock story. Joe Easton, what do you got for us this morning? Welcome back, by the way.
Thank you very much, Guy. Good to be back. We are looking at Roche this morning after the company does get some drug update news, and it is looking pretty positive for this company. They're getting an approval from the European Commission on Alcensa for a specific type of lung cancer, which could be a positive for this stock today. That drug is reducing the risk of disease by as much as 76% and also cutting the risk of death as well, so positive. At the moment, it's making them around 355 million Swiss francs a year, so it's not one of their biggest chunks, but potentially could have more to go in terms of sales. This stock does need a bit of a boost. We can see it down 29% on the 3-year chart, massively below that high we can see back in 2022. And actually, a lot of analysts do have sell ratings on their stock. Quite surprising. If we look at the makeup here, 5 analysts with sells, still 12 buyers, but clearly there are some bears on the street. They might be getting a bit more positive following that news today. Then, in terms of other analyst ratings, we're also looking at the UK asset managers today. JP Morgan switching their preference. They're recommending people buy shares of M&G. They're downgrading the rival Aviva. Now, M&G and Aviva have both been subject to a bit of takeover speculation recently, though that has actually faded. There's M&G on the screen here. It did have some weakness in some of its life insurance markets at its latest earnings, and that has spurred a bit of a decline. But JP Morgan does like that stock, as I say, downgrading Aviva, the other one on the screen there. They did actually have some quite good fund flows recently, but not enough for JP Morgan to like buying that one. Then I also just want to look at European tech very briefly, because this index closed at the highest level in around 23 years on Friday, despite that US job data that you were discussing earlier. We're also going to look out for that CPI, the impact on the Fed. That's key for tech. But we are seeing some decent gains in the Stock 600 technology index at the moment, Will that come off? Given the declines in European futures this morning, I suspect it might do. These are some of the biggest drivers over the 1 year. A lot of them are in the chip space, of course, given the focus on recent updates from Nvidia, TSMC. Also, BE Semi down the bottom here had its own update last week. Those are the big drivers. Tech closing at that massive high, but potentially going to weaken with the broader market this morning.
OK, equities reporter back from his extended break. Joe Easton, thank you very much indeed. Great to have you back, as we've mentioned. We're also going to be thinking about Apple as well. So as we lead up, we're going to get, of course, the print coming through from European equities in the next couple of minutes. And then Apple later in the day. And they're going to come out with their AI strategy. We know from Bloomberg reporting they're going to be partnering with OpenAI in some points. It's not expected to be big fireworks in terms of Apple, but they're expected to implement across some of their services already to try and show that they've got the products and they can incorporate AI and make a real difference to users who are actually using things like Siri, which I don't know if you've ever used recently, but could do with a bit of a boost.
Android.
Yes. You're all in an Android.
This is the hill that Guy Johnson dies on when it comes to the iPhone story. But I think it's important that we talk about the heavyweights there, because when we're talking about the stock market and the bond market and what they care about, it is two completely different things, especially in the context of Fed Day and CPI data as well. To what extent does what you hear out of Apple drive not only Apple stock, but the larger stock market relative to the traditional monetary policy we see that usually hits the big tech story?
Yeah, it feels like tech's in a completely different universe at the moment to everything else. And when does the rest of the market need to play catch-up in order to keep this rally on the road, I think is a question that I think increasingly people are asking. It just gets more and more concentrated by the day. Does Apple augment that today? I don't know. We'll wait and watch and see exactly what happens. When are they? 10 a.m. California time, I think, the big speeches. So we'll look forward to that event a little bit later. The CAC's expected to be hit pretty hard this morning. European equities are expected to be under a little bit of pressure. It was interesting we didn't get you didn't get an equity reaction really to the payrolls on Friday in the way that you did see in the bond market.
And on a sector-by-sector basis, the breakdown across the CAC is going to be interesting as well on the back of that call of the vote by the end of this month. Futures pointing lower, of course, across European stocks, down 0.9%. The market open is next. This is Bloomberg.
Monday the 10th of June, good morning. Welcome. You are watching Markets Today. European equity markets, European bond markets, the euro, all digesting the political earthquake we saw over the weekend. Europe moves to the right. That was certainly the narrative coming out of the European elections. And on the back of that, we've seen a snap parliamentary election being called in France. That's having an impact on the OAT market, the French bond market. And again, that is rippling through other asset classes. How will the CAC 40 open this morning? The expectations are that we will see European equities moving lower this morning, guys.
European futures currently pointing down more than 1%. You've talked about the fact that the moves in French debt have not maybe been as pronounced in terms of yields up, price down, as you may have expected, and you've tied that back to the data out of the US and the moves on the back of Friday, of course. So we weigh up whether or not politics is now more consequential for these markets than the FOMC, but clearly the forecast and dot plots are going to be essential.
I think both are hugely consequential. I think you can't really ignore either. But I think politics has maybe been the surprise factor that has caught markets kind of on the hop. We've been anticipating, obviously, this Fed meeting for quite some time. We've been looking for the results of it. We've been factoring in the data. We've been kind of figuring out what the implications of that are. The kind of the tail risk story, certainly over the last week or so in these markets, has been politics. And again, this Monday morning, that continues to be the narrative.
It has been, but I'm so curious about what this kind of reaction even looks like in the context of there's no room to do anything anyway. In terms of the actual budget deficit that you're seeing, the whole point of this was that you were starting to see at least the French government have that pressure on debt sustainability. How much of the narratives changed around that with a different kind of legislative makeup anyway? That's going to be something we watch as well. We're talking about this in the context of the bond market, the monetary policy story as well. But futures are indicated lower by about 1.7% on the French index. We are officially open here in Europe. When you're looking at the FTSE 100, early indications are, of course, lower, but again, by not that much of a margin. We're still waiting for some of the other indexes to open around the continent. But at the moment, already seeing a rough start to the week.
Yeah, we're seeing pricing, well, not yet getting pricing actually on the CAC 40, and of course that is called lower as well. The FTSE 100 moving lower, down 0.5%, dropping 41 points. We'll see that, it seems, continue now, down 0.6% as we await the CAC 40 and the print to come through there. The German DAX is down 0.4%. Olaf Scholz, of course, the Chancellor there, his Party falling into third place on the back of those European elections. The FTSE MIB down 0.7%. It was a stronger night for Meloni and, of course, on her party. But currently, the FTSE MIB down 0.7%. We've seen a little bit of pressure on, of course, French sovereign debt. But again, we're waiting for the print in terms of the oats. Euro-dollar currently 107, Guy.
So I think the euro-dollar story is something that is worth paying attention to. Rachel was talking to us about the fact that we are seeing a pickup in volatility. Keep an eye on that. The euro has been weakening. We're not quite at the bottom of the recent range. That's kind of for this year, certainly down towards 106. But we're kind of tracking in that direction recently. And I do wonder whether, again, this is something you need to factor into your thinking when you think about the kinds of stocks you want to own in Europe. It's not a big impact, but it is an impact. Do you want to own dollar earners? Do you want to increasingly own dollar earners if we do see maybe the euro considering to weaken? What does this mean in terms of some of the importers? How's that going to factor in? What does it mean for the energy story? There are consequences to some of these stories. So I think one of the more interesting moves this morning is this continuation of this move lower for the euro this morning.
And that dollar earners point that you make is a really interesting one because it almost feels like the market narrative, at least in the first 3 months of the year, was a lot of that, right? That the consumer resilience they're seeing in the States is the companies that outperform and are able to take advantage of that are going to be your best performers. But it feels like as we start to see cracks in that even U.S. consumer story, you've seen pieces of the data really question just how resilient this economic resilience story actually is. Yep. It feels like that shows up into the market anyway. And when you're talking about it, you start to see a bigger hit.
You're starting to see we're starting to get some trades. So the CAC is kind of trading around 8,000 this morning. We're just north of that, coming in through into the close this morning. Vinci is lower this morning, which is interesting in terms of the utility side of things and what's happening on the construction front. In terms of the percentage drops this morning, as you say, Tom, French banks look like they're under pressure already. Yep. Soc Gen is down by 6.5% on the back of that. I haven't seen a first trade for BNP this morning. That's not trading yet. The CAC is still not open, but it looks like it's some of the big utility companies, some of the big banks are already under significant pressure in the French market today.
We focus a lot in terms of Macron's policy agenda and building out the financial institutions, or at least the financial sector in France. We've been at events in Paris, and I have to wonder whether the scrutiny and the upside in terms of the development there has overlooked some of the concerns more broadly across France. Yes, the financial sector is doing quite well in France and has benefited from Macron's policies, but more broadly, those concerns around price pressures, around immigration, that's where voters are at, not on the beating heart of French financial sector and banking.
And as we're waiting, we're officially got the BNP now opening. It is your biggest weight on the French index this morning, dropping by over 8% that you're seeing. Total as well. You're seeing LVMH also.
Look at the CAC current go now, down 2%.
Yes, it is quite the drop there. So we're going to keep you apprised of all of that price action. But in the meantime, let's get back to the politics. The main story that's, of course, driven a lot of this conversation. Take a listen to what the co-lead candidate for the European Greens had to say about Macron's decision.
Macron's taking a huge gamble here. I think he just wants the far right to take some responsibility, and that's what he's doing now. I think that's a big gamble he's taking, because what will that do with France? How will that impact the presidential elections later on? I think he's gambling here. I don't think that's what Europe needs at the moment. But yeah, c'est la vie is probably what they say in France.
C'est la vie is probably what they see in France. Let's see if they see it here outside of France and how they view it. Chris Watling, CEO and Chief Market Strategist over at Longview Economics, joins us this morning. Chris, a pleasure to have you on the program. Hopefully you can give us a little bit more than c'est la vie is what they say in France. To me, it's the story about debt sustainability. You're trying to price in what's going on in not only the stock market, but in the bond market as well, and monitor this kind of ECB that almost has their hands tied. How do you price in the debt story in France right now?
How do you price in the debt story? Well, it's a great question. Of course, it's part of the Eurozone as a whole, so you really need to think about it across the whole Eurozone. So I agree, France's debt sustainability isn't the best, but the Eurozone as a whole is under control. It's been consolidating its fiscal deficit really since the pandemic now. And it actually, if you look at Eurozone government debt to GDP, it's pretty much unchanged for the last decade. So actually, across the Eurozone as a whole, I don't think that's the main issue this morning. I think the main issue is the uncertainty. We're potentially changing to right-wing politics in Europe. And Macron, of course, is the anchor now. It used to be Merkel and Macron. Merkel's gone. Olaf Scholz is doing his bit, but he's not the anchor that Merkel was. So this is a very significant development, I think.
So one of the pieces in the S&P downgrade from about 2 weeks ago was they specifically called out Bruno Le Maire for being able to say, we basically don't believe you on being able to bring that budget deficit below 3% by 2027. Bruno Le Maire, of course, pushing back against the credit ratings agency, saying, we absolutely can. Where do you stand on that? Is that doable? Who's right there?
Well, I mean, to be honest, we've had a lot of downgrades by credit rating agencies of Western government debt over the last 10 years, and really the market's not that bothered. It really doesn't seem to be making a bit of an impact. So, I mean, clearly France needs to get its house in order. It's not doing a good job. Italy's did have its house in order for a long time. Germany has. France is kind of the laggard in that respect, so they need to. But, yeah, I think the markets don't care that much about that, quite frankly.
We're talking about the right-wing shift, and, of course, the broad picture across the Parliament looks like it's going to be relatively similar. You've talked about the fact that Europe has managed to keep its house in order, at least over the last decade, in terms of debt. I just wonder, these are populists, right-wing, extreme right, however you categorise the different parties across the Eurozone and the gains that have come through. There's a populist element here. What does that mean for spending on some of the measures that they are touting to their electorate?
Well, I mean, I think what it means is, you know, it's uncertainty. That's what the market's grappling with today, isn't it? We're moving, potentially, a risk of moving away from the centre and moving towards, you know, threats about breakup of the euro. I know they're not making those noises, but, you know, those kind of policies, and yes, more spending potentially. You know, I mean, these things are relevant. I think if you're overseas, you're looking at Europe this morning, you're thinking, well, this is a little troubling. You know, I need to, you know, you want to worry about your European exposure. But I think this will pass. These things generally pass. They're very dramatic on the day. They generally pass. And Europe, look at Meloni. I mean, she's not the dramatic sort of far-right populist leader. She's been tamed by Europe. She's been tamed.
And the question is whether future leaders from parties like the AfD or Marine Le Pen's National Rally, whether they are also tamed by the institutions of Europe and the necessities around the debt constraints they have. But you said the breakup of the euro. It's probably an outlier case for you, Chris. But
yes.
Do markets need to start taking that risk more seriously? If it's not the next couple of years, maybe longer term?
Well, I think realistically, you got a tiny bit more of a tail risk in there now. I mean, let's not over-exaggerate the risk, but clearly politics is shifting, and it's shifted in Europe in the last 12, 18 months, 2 years, 3 years, much more right-wing, far right, and that is a breakup of the euro risk. Would never be your central case at the moment, of course not. But it's there. I mean, Europe is not properly, fully constructed as it should be as a single currency union. It never was post the euro crisis. It's not a proper banking union. It's not a proper fiscal union. It's edging that way. And, of course, this politics doesn't help.
Morning, Chris.
Morning.
That's a lot in there. Markets are really bad. You talk about uncertainty. Markets are really bad with this. Can't figure it out. Don't know what to do with it. Seen it in India. You've seen it in South Africa. Now you're getting it in Europe. It's a tail risk that is really hard to deal with. How do I therefore think about November and the US?
Yeah.
Can I think about this as a trend? Do I need to be more aware in terms of the way that I kind of invest around the possibility that politics upends my portfolio in a much more meaningful way than I had anticipated?
Well, it's true, isn't it? I mean, when I started in the game in the 90s, no one cared about politics. I mean, it was really by the by. I mean, and we're talking about Clinton. What happens when he's paid off all the government debt at the end of the 90s? It's a very different world. And now, of course, there's such a bifurcation, a split and division in politics, and it's in America as well. And I think that election's really, really important in November. It's important because you've got a different fiscal take from the two of them. You'll probably get more fiscal profligacy with Trump. Biden will try and consolidate the fiscal deficit. That really matters for markets. And, of course, it matters because of the divisiveness that you'll get primarily more so with Trump. But, I mean, politics is hugely significant today in a way it wasn't.
It's really hard to price.
It's just so difficult to price. It's like trying to price a geopolitical risk premium. It's very, very difficult.
Let's think about some of the longer-term implications of all of this, though. Immigration. If we move right, immigration is going to be a factor that we need to maybe take into account more seriously. If we limit immigration, the labour force, the demographics that we're dealing with become more problematic because we can't balance that ageing population with a younger immigrant population. that, in theory, is more inflationary. How do I think about the longer tenors when it comes to bond markets? Do I need to think about maybe inflation being stickier for longer, monetary policy needing to lean in on this and factor that into my thinking as well?
Yeah, and of course it's even more complicated than that. If you think about Japan,
Yeah, exactly.
No immigration, ageing population, bond yields at very low levels. So you can argue it both ways, inflationary, deflationary.
Good point. Yep.
So with I think the easiest way to think about it is your nominal GDP growth equation goes down if you have less immigration, and then you think about your mix of inflation and real growth, and of course that really feeds your earnings growth, broadly speaking, for the stock market, and has a number of other effects. So, yeah, I mean, it's really important. Immigration really, really matters. It makes a difference. It's important to the way this equation. For markets, in the long term, not in the short term, but the very long term, it does matter. And Europe, no one's interested in Europe. No one's invested in it for 10, 12 years, 15 years. I actually think it's going to be a theme in the next 2 to 4. Today's news doesn't really help, or yesterday's news, but I do think there's an interesting argument for putting money into Europe on a 1 to 4 year basis. And it sounds contrarian and slightly nuts, but it actually is very logical. It's very logical. It's not nuts at all. I mean, in fact, there's a whole argument the Western consumer is going to boom over the next 1 to 4 years, which I think they will. And the simple nub of it is they've been consolidating their household balance sheet for 15 years. Banks have been getting their house in order for 10, 15 years, and that is all done. And the trend is going to change.
Governments are going to tax the heck out of them because the government. You think about money in buckets. Governments have got massive problems. Their bucket is empty. The consumer bucket is full. Isn't the logical thing to do to fill the government bucket from the consumer bucket?
Yes, but if the growth comes because of expanding banks' balance sheets and more credit, then governments get money anyway. They don't need to do that. So, we forget that economies can boom. I mean, in the UK under Gordon Brown and Blair, we grew at 5% year on year some years. I mean, people are like, well, some quarters. But, people forget that. We're so lost in this 15 years of dreadful, dire growth. I think governments, you're right about buckets, but if the whole pie's expanding, it doesn't matter.
The Johnson household has been profligate, by the way, with the Birkin bags and the Ferraris. We've been categorising that over the last week.
Porsches on Friday, wasn't it?
Was it Porsches, Ferraris? Definitely the Birkin is sitting in the back of one of them.
Yeah, yeah, precisely. I need somewhere to store the Birkin, so I buy the Ferraris and the Porsches. I don't know quite where Tom's going with this, but it sounds like a very nice outcome for me. Chris, nice to see you.
Nice to see you.
I look forward to the consumer boom.
It's coming.
Is this by the dip right now?
I think, markets have got a lot of momentum in big cap tech, so you've got to time the turn. But
you'd buy the European dip this morning?
I mean, it depends on if you're a long-term investor, absolutely. Buy Europe all year this year.
OK, there you go. Buy Europe all year this year. Chris Watling, CEO and Chief Market Strategist at Longview Economics. Thank you very much indeed. Let's take a look at what the core of Europe looks like this morning. This is the core 6, some of the core stocks that you need to be watching out for. And this is what they are doing, as you can see, uniformly in the red. Even Ferrari's red this morning. OK, what are the stocks that we need to be watching this morning? Joe Easton, over to you.
So we got lots of red as well over in France. Some stocks here getting absolutely slammed in the open of trading, particularly the ones that are exposed to government contracts. We're looking at the likes of Eiffage and also Airport de Paris. Saint-Gobain was also down sharply. Eiffage was down 10% at the open of trading. Is trimming that now, given this shock legislative election call by Emmanuel Macron that will potentially impact his position in terms of getting laws pushed through Parliament. Looking at the banking stocks, also seeing SocGen down around 5% at the moment. BNP was lower, Credit Ag, all of those stocks slammed in the opening of trading. A massive impact across the French stocks. Every stock on the CAC 40 is in the red this morning, and the top 10 on the Stock 600 decliners all over in France, just showing us how much of an impact that is having today. Then in terms of your deals, they're all mostly in the mid-caps. We're going to look at a couple, though, on the screen here. We have got Banco Profilo over in Italy. An investor is looking to sell out of that one. We'll wait for a price on that. Might be a bit volatile, hence no price at the moment. Then in chemicals, Sayers Getters, that is in the chemical and lighting space. They've got a takeover bid which has been increased. Stock gaining 1.8% at the moment. Brought up Credit Ag because they're selling their 15% stake in a Moroccan lender. Again, we're in mid-caps, but take a look at the Credit Ag share price. It's down 4% today. The election impact in France, clearly the biggest weight on all of those stocks this morning. One to bring you from the UK press at the weekend is Ashtead. The company is looking to potentially relist in the US following the likes of CRH and Ferguson. That has been a problem for a lot of UK stocks that have relisted there, in terms of around a handful of companies that have decided they get better valuations in the US. Ashtead potentially the next one to do that, and that one is up around 0.9% this morning on that news. Then a couple of morning calls to bring you. Nestle gets a rare downgrade. This one is over at Morgan Stanley. The company still doing well in the coffee and also pet food space, according to MS, but losing market share in other brands, according to the broker. Not Kit Kats with me, because I eat probably hundreds of those a month. Finally, we're going to look at Puig. Now, you might remember this. This was the biggest IPO in Spain since 2015, just a couple of years ago. And today, the blackout period has ended, and analysts are recommending you buy this one. Santander, JP Morgan, lots of brokers recommending you buy this stock. It's the owner of Charlotte Tilbury and also Jean-Paul Gaultier perfume as well. And that one is gaining today in Spain. The Barcelona-based company up 1.5% this morning.
All right, Joe Easton from our equities team, we thank you so much walking us through some of the market action there. And, of course, as he was speaking, some headlines coming from Giorgia Meloni, doing a little bit of a victory lap, if you can call it that, basically saying that the vote result very important politically, and Italy has beat the trend in governing parties in Europe, which arguably is a broader trend than just you're seeing in Italy. Of course, speaking on RTL Radio. Coming up on the program, we're going to talk about the tech side of this market sell-off that you're seeing. Apple's Developers Conference will show whether it can be a force in the AI industry. We're going to walk you through what to expect from the event next. Stick with us. This is Bloomberg.
Welcome back. This is Markets Today. We are 20 minutes into the European trading day. You're seeing losses across European stocks, down 0.7% on the European Stock 600 benchmark. Over in France, though, the CAC 40 falling by 1.8%. In Germany, the DAX down 0.7%. In France, some of the biggest losers coming through from the banking space. SocGen down more than 5%. BNP Paribas down 4.7%. Crédit Agricole down 3.6%. Energy, construction in France also taking a hit on the politics and the surprise call by Emmanuel Macron, the president, for a parliamentary vote. Let's get back to technology, though. It's a big day as well as we look ahead to the US and Apple. Apple set to lay out its vision for AI, finally, some would say, at its annual Worldwide Developers Conference later today. Matt Bloxham from Bloomberg Intelligence is here with a deep dive. Matt, what are you and the team expecting?
Lots, I think, is a short answer to that. And it kicks off at 6 p.m. UK time, 10 a.m. Pacific time. I think the big focus is really about whether this is going to kickstart a new smartphone super cycle. Obviously, over the last few years, we've seen smartphone sales generally on the slide. That's affected Apple too. It's over 50% of their revenues. And if you look at the way this is being positioned, these AI features that they're going to announce, what everybody's focused on, are only going to really be available on the new versions of the phone to come. I think they're going to be available to people with an iPhone 15 Pro, but not many people have one of those. So it's going to be, does Apple do enough with these AI features to make people think, actually, I really want to upgrade my smartphone in September to get access to these new features?
How low or high are expectations going into today? Is it expected that Apple is going to continue to be a laggard after this event? Is this something that changes the narrative around Apple significantly enough for people to get excited about Apple again? The markets are based on expectations. What is market expectation going into this?
Yeah, I mean, I guess with a $3 trillion market cap, you know, there is inherently a lot baked into Apple. How much of it specifically around this event, I'm not so sure. But, you know, I think...
Well, everybody's waiting for Apple to get into the AI game, and it hasn't yet.
They are. Well, I mean, Apple would say they've been in the AI game for like a decade or more.
OK.
But the generative AI game may be something different. So, yeah, and I think, you know, what we've seen with Apple over the last, 5+ years is that they're quite gradual. They're kind of become a bit more risk averse. They don't want to step into this and be the leader because it's kind of fraught with risk. And we've seen that with people like Google and, mistakes on their chatbot, for example. So I think they're going to be cautious, but they're going to lay out that they are a serious player, and this is part of their mid to long-term roadmap, and this is going to beat them up into this kind of substantial player. The fact they're going to call it Apple Intelligence, kind of tells you what they're thinking about their expectations of dominating, being a major player in the space.
All right, very quickly, does that change the game, though? If they come out and have a NVIDIA moment where they're saying we're really talking about AI and we're going to dive in and throw all of our money into it, is that going to be well received by investors?
Yeah, I mean, I don't think they're throwing all their money into it, but, they're throwing enough. And, I don't think it's going to be an NVIDIA moment in the way suddenly go, oh, my goodness, maybe that will come, if as they evolve the technology. But I think for now, I think people are looking for them to do enough to kind of be reassured that they really, have upped their game, they've caught up, that, there has been this gap emerge, they're closing that gap, and they've got a technology pathway that essentially allows them to kind of cement their leadership in the consumer technology space.
10 a.m. Eastern, we're all going to be watching out and seeing exactly what comes from Apple later on today. Matt, thank you very much indeed for setting it up for us. Matt Bloxham of Bloomberg Intelligence. We've got great coverage coming up from Apple's developer conference that is taking place. We're going to have an exclusive interview with Apple co-founder Steve Wozniak. That coming up a little bit later on right here on Bloomberg Television. That is one of the events this week that we're watching out for. There seem to be three kind of key events. One is Apple. The other one is obviously the Fed/CPI out of the States. The third one is European politics more broadly. And wow, this morning that is causing consternation amongst European assets. We're seeing big moves in OATs, in bunds. We're seeing the euro move really quite significantly. And the latest kind of element that we're seeing this morning is this big move lower in the CAC 40 led by the French banks, which are really under pressure and in some ways seem to be almost pricing this idea that Macron has taken a risk and that we are potentially on the cusp of maybe actually him losing control of Parliament. Is that what we're pricing this morning? Or is it just the uncertainty? Is this uncertainty, or is this an expectation that actually, if the polls are correct, then the French Parliament is about to shift right in a radical way?
In terms of cohabitation, because, of course, his role as president is unaffected by this, but you could get a scenario, and we had it before with Jacques Chirac, 1997, where you have the president having to nominate a prime minister from a different party. So is that what's being priced into your point, or is this a knee-jerk reaction to the surprise increase in uncertainty that's come through? No big surprise that the far right did well in those European parliamentary elections. Of course, the surprise coming through from that call for that parliamentary vote from Macron.
Well, it crystallises it at a national level.
I think what's so interesting here is we were talking about the bond market earlier. You're seeing a sell-off across the curve, even though that initial jump, kind of a knee-jerk reaction, was a bid into the front end. And yet your biggest weights on the French index are going to be your banks. That's contrary to the traditional market reaction we see. Yields higher usually means banks higher as well, because it translates kind of into that net interest income. It's not the dynamic you're seeing.
But they're big holders.
The state is the big...
so that's... Well, not the state, the French banks. It's like Italian banks. They're massive holders of BTPs. So you get a big move in DTPs, you get a big move in the Italian banks. That's what we saw during the crisis, the euro crisis. That kind of doom loop kind of story that we've watched out for. That is something that I think we are going to continue to see maybe being priced in today. It started with the bonds and then gets priced into the banks. BTPs are faring a little bit better. Some of the Italian banks don't do quite as badly on the back of this.
Yeah, banks absolutely being hammered. Is a windfall tax on the banking sector something maybe that would appeal to the populists of the far-right national rally as well? SocGen currently down close to 5%. Coming up, French President Emmanuel Macron. We'll get more on this, of course. Gambling, as we've been discussing, on that snap election after a crushing loss to his far-right rival, Le Pen, in this weekend's European Parliament poll, at least her party. We'll get more on the European elections next. This is Bloomberg.
We see now some instability in countries like in France or here also in Belgium. Let's see how the outcome of the national elections will look like. And that means for us, we have to do as reasonable politicians on European level our best to organize again stability. That is what we need in Europe, but also to contribute to the global development.
I think it makes no sense. I think it's just very stupid and it's not democratic. Democracy doesn't mean that the result will be something that you like. So when people vote, you see the result and you need to consider it as an information. Information, people vote, you don't like the result, but what is the result here to teach you about?
EPP President Manfred Weber and the Vice Chair of the European Conservative Reformist Group, Asiti Yakanko, there, talking about what we've seen over the weekend in the European elections. But then the kicker here is what has happened in France and this snap parliamentary election for the National Assembly that has been called. And you can see the impact of it. Look how significant the underperformance already is when it comes to French stocks. That is largely led by French banks, but there's kind of some of the big utility companies and some of the big construction companies are in the mix there as well, guys. We are seeing French banks coming under significant pressure this morning. And we've already had a conversation with one of our guests this morning talking about the fact that it's not the base case, but just in terms of your pricing, you have to think about the vulnerability around the euro surrounding this. We're getting into reasonably, I say uncharted recent history with the political moves that we're seeing here in Europe. How do you factor that in? Do you just need to price in a little bit of marginal risk back into kind of the stability of Europe here? I wonder, and it certainly seems that that's what's being priced in this morning.
Well, it's fascinating as well because going into this, before the snap election as well, the consensus was already that this is more of a dollar-driven story. What happens in the States and from the Fed is going to be driving euro-dollar more so than even the ECB itself. This kind of changes that narrative. But again, simply not by that much. Even off the back of that, you're still only seeing weakness in euro-dollar 107. To me, the bigger story is what the euro is doing against the pound, because those seem to be more neck and neck.
And, of course, you're plotting your next holiday to Spain. 1 month volatility, Ven Ram saying, has risen on our MLive team to almost 6% from 5%. And he says, you read from that currency traders are factoring in the possibility of 105. So maybe hold steady until you book that holiday. 105, potentially what's being flagged by these markets on euro dollar. To your point, you know, with the Fed coming up, does that then move? Are we still talking about this story come the end of Wednesday, come early Thursday, or is it just all about the dollar play on the back of inflation and dot plots that could move from 3 to 1?
I think that you can't ignore any of that.
Yeah.
All of it is hugely significant. But what I think what markets are having to factor in is the fact that politics is becoming an increasingly important part of the narrative. We have spent months debating the minutiae of Fed policy. And we've seen this kind of huge shift, and we've been on tenterhooks for every piece of data that has come out. The politics has barely entered the conversation, but now politics is front and centre. And this is all a prelude to November. This is all a prelude to what is coming out of the States a little bit later on this year.
Does this then show up in those parity conversations? That's what I'm curious about. There's kind of been this outlier consensus, or not consensus, outlier conversation to the consensus that at some point we're going to talk about revisit euro-dollar parity. And it kind of has been a strange conversation to have in the context of 108, 109 on the currency pair. Now that changes it, not only in terms of Fed policy, but in terms of if we talk about that protectionism that Peggy Collins from our D.C. Bureau was talking about earlier in the show, when does that get factored into the FX
Let me factor
market?
something back into that narrative, which is the ECB is sounding more hawkish than maybe we had anticipated. So in some ways, we'd anticipated that we'd see this divergence, that the ECB has cut rates, and that we would see further sequential rate cuts coming from the ECB. That is now being called into question. So in some ways, you could argue that is euro positive, dollar negative, and maybe that's kind of maybe we don't see this extreme divergence we were anticipating.
But do you think that's why the move lower, at least in the euro, isn't actually that big of a move lower? And I think the expectation was that it would be a bigger hit, and you would see more euro weakness. You're going basically from 108 to 107.63. Even on a percentage basis, it's only down 0.4%.
Did they inadvertently put a floor under the euro?
Right, because of the ECB.
Exactly.
Right.
I wonder whether but
the things that keep Guy Johnson up at night.
They do, weirdly. I think that the picture this morning, though, is much more complicated than it was, and I think that the politics we've seen in emerging markets now interrupting the story here in Europe, and now I wonder how it's going to place greater emphasis, and everybody's thinking will change, maybe just at the margin and maybe incrementally as we work towards November, about what is going to be happening there. Look, we need to talk about this in a little bit more detail. Let's get you kind of around Europe and get you an idea of what is going on this morning, because we're giving you the market picture, but let's fold back in the politics that we need to be paying so much attention to here. Bloomberg's Oliver Crook is in Berlin. Stephen Carroll joins us from Brussels. Caroline Conan, though, at the centre of the action this morning in Paris. Caroline, the risk is now written across the market. French banks are under pressure. They're looking at this election. The uncertainty is enormous. They don't know how to price it. We're looking at OATs as well. The market is struggling with this uncertainty as well. How big a risk is Emmanuel Macron running here with this snap poll?
clearly, many say he's playing with fire, and you can see there's going to be less appetite for risky French assets in the few weeks before the snap elections at the end of the month. What Macron decided to do last night was a bigger shock in response to a shock, which was this large victory of the national rally of Jordan Bardella in this European election. 32% yesterday, more than double the score of his own party, Renew Europe, with a candidate Valérie Ayé, who has been struggling to exist in this European elections campaign. So what Macron said last night is that he is calling the French to wake up, and he is choosing to write history instead of being driven by it. So we'll see how this pans out. Clearly, this is becoming a referendum for or against the far right, for or against the national rally of Marine Le Pen, that she's been using these European elections as a springboard for the next presidential elections in 2027.
Caroline, how does this show up in the policy, though? When it comes to the change between France and broadly Europe, where does it show up in the shift?
Yeah, I mean, clearly in Europe and especially in France, the shift is going away from climate change and now more focused again on migration, border control, defense spending. That's going to be the focus. Also, cost of living, which is at the top of the French agenda in these legislative elections over the next few weeks. This is clearly what Jordan Bardella has been driving his campaign on for the European election. This is clearly what's going to be driving this legislative elections campaign as well. You know, Marine Le Pen has spent years trying to detoxify her party. A couple of weeks ago, remember, she said that she is breaking up with the AfD in Germany because of their recent comments about the Nazis not being all criminals. So she doesn't want to be associated with this anymore. She doesn't want to be associated with a potential French exit from the European Union. She has tried to normalize her National Rally Party, and we'll see if that pays off in the snap elections at the end of the month, and if that changes the majority that Macron is getting, and if he does need to change the color of his prime minister and his entire government.
Bloomberg's Caroline Connor across the whole French story for us in terms of the political shifts that have been happening, pretty dramatic ones in the last 24 hours. Caroline, and you talk about the shift, of course, to Marine Le Pen. They've had their own issues with the AfD over in Germany. The AfD performing relatively well in the European elections. Ollie, let's bring you in at this point. Bloomberg's Oliver Crook for the take from Berlin. But Ollie, look, Olaf Scholz's party, what a hammering for them. But can investors take any respite from the fact, any comfort from the fact that this is a more traditional conservative win in Germany that's come through from these European elections?
I think probably to a degree, and I think that what we got out of Germany was more or less in keeping with a lot of the polling that we saw. And again, just to recap it for everybody, the CDU, the traditional conservatives of Germany, you know, Merkel's party, they took 30% of the vote. And this is generally often the strongest party within Germany. You saw that sort of come back after the Scholz victory of the election a couple of years ago. And what you also saw, though, and again, this is what people have been focusing in a lot about, was the AfD's victory of 16%, which beat Scholz's SPD. SPD had their worst ever showing in the EU election. And for the AfD, this is really a large coup. I mean, this has been year after election in the EU Parliament. They've taken more and more position. And when you sort of bring together all of the parties that are part of the government that is currently ruling Germany, they only won 35% of the vote. So when you kind of take a step back about kind of what this means, forget the EU Parliament, what this means for Germany, what you have in Germany and what you have in France effectively were sort of national referenda on their own governments, neither of whom really have the support of the people like they did previously, right? And so this opens a really interesting and I think important question that is all the way aside from the number of seats in the MEPs is who is going to lead in Europe? Already Germany and France had difficulty getting on the same page and lead together. Now you have to a degree kind of lame duck presidencies or governments, at least sort of a rebuke from the polls here. So Macron's sort of solution to that is, hey, listen, I'm going to call a legislative election. Maybe what we will see is that in France they're willing to elect sort of the National Front to the sort of parliamentary body of the EU, but not within France. Scholz does not have that lever to pull. So Scholz leaves this severely and weakened. What is interesting is then, bigger picture, who is going to take the initiative for that leadership role of Europe? Part of that guy is just vibe, and Meloni's got it right now.
She does. Down in Italy, certainly she is the big winner. And it's going to be interesting to see how that narrative interacts with the centre ground, potentially the EPP, maybe continuing with the leadership at the European Commission, and what that does ultimately to the agenda that Europe now pursues. Talking of that agenda, Ollie, Europe has been making a massive push over the last few years, and people have been investing in it. The green transition, the energy transition, that has been one of the big losers out of this weekend's election. Where does that leave the Greens in Germany? What does their agenda look like going forward from here? And if that is severely stressed, how is the coalition going to work in Germany?
Listen, Guy, there's already been a huge number of problems with this coalition working in Germany. And listen, there have been conversations apart. Could this coalition fall apart? I think everybody in the coalition is cognizant of the fact that if anything were called now, that they would all just be basically wiped out. But the Greens were certainly the big loser here in Germany. They seem to have been really the big loser across Europe. And as you say, Guy, really this was a sort of green election back in 2019. You had that massive green wave, and it gave them the sort of confidence at the EU level to really go forward with this green agenda, saying that they're willing to spend, $1 trillion a year to get the transition going. And that has all sort of but left the sail, Guy. Listen, a lot of the centrist parties, the center-right and the center-left, both are still on board with the green agenda overall. So I think that, generally speaking, the direction of travel will remain the same. But again, I think that you will probably see some sort of hesitancy to push it quite as hard. Could you see some changes in, for example, combustion engine phase-outs? These are all the sorts of things we're going to be paying attention for in the next weeks and months to come.
All right, Bloomberg's Oliver Crook there walking us through the dynamics coming out of Germany. We thank you so much for that crucial context. Next, we go to Brussels, where European Commission President Ursula von der Leyen's Centre-Right EPP grouping is projected to cement its place as the biggest group in Parliament. Stephen Carroll on the ground, of course, covering this election minute by minute. Stephen, walk us through what that means for Ursula von der Leyen. Will she get another term?
The signs are pretty good. The majority that elected her in 2019 still has a majority, slightly diminished, mainly due to the underperformance of Emmanuel Macron's party in France. But the EPP actually gained seats, something that they hadn't done in many European elections, reversing a trend of decline for the centre-right at a European level, the socialists holding their ground. And actually the conversations we were having in the European Parliament yesterday on the issue of the Greens that we just heard Oliver Crook talking about there, is the Greens are open to talking to Ursula von der Leyen about perhaps supporting her for a second term as European Commission, because they want to see some of those priorities brought into the Commission's strategy for the next 5 years as well. The meeting's starting today between the EPP, the Socialists and Democrats, and the Renew group to try and build that alliance. They do have the numbers, although not everyone votes the way they're supposed to in this vote. In 2019, Ursula von der Leyen had just 9 votes when it came to it, even though on paper she had an awful lot more going into the vote that she needs this time around to secure a majority of 361 in the European Parliament. There's a hurdle to come before that as well, because actually Ursula von der Leyen's name only goes to the European Parliament if European leaders agree that she is their preferred candidate. That meeting, the first one of those, going to be an informal conversation of EU leaders taking place this day next week, giving those leaders a chance to talk about it. I spoke to the president of the EPP, Manfred Weber, last night, and he said, look, it's very clear the EPP won this election. They came out on top. The only solution is for them to go to for Ursula von der Leyen. Of course, he was the man who should have been Commission President in 2019, but the leaders decided to go another way. There's always a chance things could go differently, but it does look good for Ursula von der Leyen on the face of these European parliamentary results.
So, Stephen, you've given a bit of detail there in terms of what happens next, in terms of how this unfolds, the political horse trading that will be happening in Brussels in the hours and days ahead. Build out that picture a little bit and give us more details. We've been hearing from Maloney. She's been taking something of a victory lap in terms of other votes coming through from other EU members, where things stand, Stephen.
Well, that's going to be one of the other factors to watch here as well. Before this election, we'd had Ursula von der Leyen cozying up to Giorgia Meloni, perhaps suggesting that if she didn't have enough support from her own coalition, that she could go looking for it from the European Conservatives and Reformists, the group that Italy's the Giorgia Meloni party led in Italy dominates that group as well. We've just spoken on Bloomberg Radio to another MEP from that group as well, Johan van Overveld from the Flemish N-VA party here in Belgium, and he was saying that, look, it's really in Giorgia Meloni's hands as to what the future of that group looked like, because there's going to be other parties, the AfD is one of them, shopping for a new political grouping in the European Parliament, which is part of how things play out from here, as well as the groups realign after this election. We could see the numbers shift a bit, and that will be another one of the crucial factors to watch as these meetings go on behind the scenes to agree on common priorities and hopefully, in the MEP's eyes, agree on a European Commission president in July.
It's going to be fascinating to watch, isn't it, how the horse trading is going to work with this lurch to the right, how that's going to change the calculation and the agenda and the spending here in Europe. Stephen Carroll in Brussels, thank you very much indeed. European equity markets are down. They are led by the CAC 40, which is down by 1.8%. French banks under significant pressure. I want to fold in another political story next into our conversation. Benny Gantz quitting Israel's emergency government, criticising Benjamin Netanyahu and calling for fresh elections in Israel. Another story on the political front that we need to factor into our thinking this morning. We'll bring you the details of that next. This is Bloomberg.
This is Markets Today. We are about 50 minutes into the European trading day, seeing a sell-off across the board, but heavily concentrated in those French assets after Emmanuel Macron calls a snap election. We're, of course, going to see the fallout of that. You are seeing the banks drag down the index by the most. But, of course, that risk-off sentiment showing up even in Italy, where you did see Giorgia Meloni with quite the win. A handful of stocks in the green there. But, again, a sell-off across Europe. And you're seeing that, by the way, in the bond market, in the stock market, even some weakness in the euro. And as we monitor those markets, we're also watching the latest coming out of the Middle East. Israeli Prime Minister Benjamin Netanyahu's major domestic rival has resigned from the nation's emergency government over the handling of the war against Hamas. In a televised news conference, Benny Gantz said Netanyahu was preventing Israel from achieving, quote, true victory in the war, saying that the politics were getting in the way of strategic decisions. Let's get a little bit more insight on this story. Bloomberg's Israel bureau chief and senior Mideast editor Ethan Bronner joins us this morning from Tel Aviv. Ethan, pleasure to have you on the show. Walk us through what this departure of Benny Gantz means for Netanyahu and the broader war in Gaza.
Well, the honest truth is it may not mean very much. Don't forget, Benny Gantz joined the war cabinet after the right-wing government of Netanyahu had been well-formed with 64 members out of 120 members of the parliament. And this was just a kind of emergency act of national unity on his part in order to start the war and carry it out. And the truth is, over the last few months, Gantz felt that his influence had really waned, and it was being run entirely by Netanyahu. And his departure means less for the decision-making as much as it means for his frustration that he was not having the kind of influence he wanted over those decisions. So the decisions, in my view, will go ahead the way they were before.
What does it mean then, Ethan, for the prospect of elections in Israel? The critics of Netanyahu, at least some of them, would suggest that he's prolonging the conflict because he doesn't want to face the voters at home. What is the electoral prospects around this government?
Again, in my view, I don't think that they are very high. I mean, obviously, if 64 members, if he loses his majority, then there can be elections. But the Gantz wanted elections before. Of course, he and the opposition are unhappy with this right-wing religious government, but it is solid at the moment. So one of the things he called for when he left last night was new elections, but he made that call several months ago as well. It doesn't seem very likely that they're going to happen before 2025. The only issue that's going to get in the way, and it's not really about the war in Gaza, has to do with the conscription of very religious young men who are known as Haredim. That issue is going to strain this government, but my guess is it will survive it over the coming months.
Bloomberg's Israel bureau chief and senior Mideast editor Ethan Bronner joining us out of Tel Aviv for a little bit more context and, of course, the developments over the weekend. We thank you so much. So we've done a lot of review of what we've gotten in terms of news in the last 48 hours. Let's look ahead to the rest of the week. Today, all eyes over, at least in San Francisco, Apple Worldwide Developers Conference plus London Tech Week. We're talking a lot about this broader market here. It feels like the stock market, specifically in the States, driven by that tech story, operating to a completely different tune. But on Tuesday, it's that data that matters right here in the UK. We'll get that jobs data out, plus OPEC's monthly oil report. On Wednesday, again, more data coming out of here, data, industrial production, but really the highlight is CPI and that Fed rate decision coming on the same day, which is a real rarity. We're going to talk about what that volatility looks like going into that crucial Wednesday. Thursday, we go back to the foreign story, G7 leaders meeting in Italy. And then, of course, Friday, it's all about that BOJ rate decision. We're coming back to the eco story. I think Guy and Tom may be watching the Euros as well. Those kicking off Friday. Germany versus Scotland, I hear. In the meantime, let's get to the market story. That's really the highlight of the week. Now that as we start to digest what's going on in the parliamentary elections is from the Fed and that CPI on Wednesday. Bloomberg's MI strategist, Ven Rom, all over that story. Ven, good morning from London. Walk us through, just given all the volatility you're seeing this morning, what positioning looks like going into that crucial Wednesday.
Morning, Kriti. I think that, the markets are thinking maybe 36 basis points of rate cuts is what we should factor in from the Fed. But look, the Fed made a policy blunder in December by outlining 3 cuts, and they compounded that error in March by again sticking to 3 rate cuts. So the question really for the markets is whether we get 3 rate cuts, 2 rates, or none at all. None at all would be sensible. 1 would still be admissible. 2 would be dovish. 3 would be pretty comical at this point. So and the other thing that the markets will be watching for is the core PCE forecast. The Fed thought that 2.4% would be what cuts it for the year. But then in March, they revised it up to 2.6. Now I'm expecting a further upward revision. The third thing, and probably the most important of the lot, is what they do with the neutral rate. They indicated a 10 basis point increase in the neutral rate in March to 260. Now, they don't change that too often, but given all the structural elements playing into this inflationary narrative, I wouldn't be surprised if some of the members at least revised it higher again.
Ven, monetary policy seems pretty understandable right now relative to what we're seeing in the political landscape. How do you think the markets are going to adjust to a more volatile politics, particularly as we move towards November? How do we think about this? How do you think markets are going to price this?
I think, this political risk premium is a very elusive phenomenon. It's very difficult to pin it down with any certainty. But if the markets are right, if the fears in the markets that, Trump is going to come back is right, I think that, it would mean greater fiscal profligacy, and the market should accordingly price for it. That will mean an overshoot in inflation, the Fed having to stay higher for longer. And of course, people are questioning what happens to the Fed itself, or what happens to the independence itself. So I think there is a lot of risk premium for the markets to ponder about in the coming months, Guy.
OK, as we consider the risk premium, European stocks lower by 0.4%. The CAC 40 over in France sharply lower by 1.6%. French banks tumbling on this news. Jeffrey saying they remain underweight French equities on the risks around the deficit. Plenty more coming up. This is Bloomberg.